This is the Asia Trade. I'm Shery in Tokyo.
I'm Haidi, Stroud-Watts in Sydney. The top stories this hour. A positive lead-in for Asia, with Wall Street reversing a 2% slide after the US economy contracted in the first quarter. Microsoft and Meta jumping in late trade on better than expected sales. The Bank of Japan set to stand pat today for a second straight meeting, but it may lower growth forecasts on worries over the trade war. And the US and Ukraine sign a deal on mineral resources as Kyiv works to secure President Trump's support in ceasefire talks with Russia. At the top of this hour, we are getting you breaking news when it comes to the manufacturing PMI numbers out of Australia. The S&P Global Australia PMI for manufacturing gauge. This is the final reading for April, coming in at 51.7, so unchanged from that previous reading, the previous preliminary reading, I should say. It is seeing a little bit of a pullback when it comes to comparisons to that March number, though, given that we had 52.1 coming down now to 51.7. That had been the highest reading since October 2022, and it sort of snaps 3 consecutive months of expansion there. We also saw quite a high reading when it comes to output as well as new orders, but we do know we're looking for any signs of really both the primary and the secondary impact of tariffs and the trade war and the exposure to China when it comes to these data points, Shery.
Yeah, we'll be watching the ASX 200 when it opens. We actually saw some gains in the previous session. You can see that futures pointing to the downside, though we have seen some gains for the stock market. 5 sessions of gains, which would make it the longest winning streak since August of last year. We have seen the Japanese yen under a little bit of pressure overnight, but we're talking about a 5% gain or so in the past month, as well as we'll continue to see that strength in the Japanese currency as well. But we could see some thin trading across Asia because, of course, we have China away on holidays, Korea as well. In Korea, the markets are closed, but we are getting those export numbers later today. So do watch out for that, because we are going to see perhaps a little bit of that fallout from the ongoing trade war that you just alluded to. Take a look at how U.S. futures are coming online, because we had seen some weak economic data, surprising to the downside. First quarter GDP seeing the first contraction since 2022. But we had also some positive data coming from consumer spending, which also jumped by the most since the start of 2023. At the same time, we had the Fed's preferred inflation gauge sort of moderating, so people perhaps thinking that we might see the Fed being able to accelerate its monetary easing. U.S. futures with the NASDAQ up more than 1%. Of course, we're still digesting those tech results. We'll also be watching the semiconductor side of things here across Asia, given that we got a little bit of that tepid outlook when it came to Qualcomm and its business predictions. And of course, as I mentioned, much of Asia is away for Labor Day holidays. I mentioned Korea, I mentioned mainland China, Hong Kong as well is away, and Singapore too, Heidi.
Shery, let's take a closer look at these. The GDP reading, of course, that dominated much of the session overnight. President Trump blaming his predecessor, Joe Biden, for the weak economic data that initially sent US stocks tumbling before we saw that late-day recovery.
Core GDP, and this is, you probably saw some numbers today. And I have to start off by saying that's Biden. That's not Trump, because we came in on January. This is the quarterly numbers. Let's give us a pass on the first month. We were sort of getting a little bit used to things.
Our global economics correspondent, Enda Karan, is in Washington and joins us now. And Enda, we know a big component of this was really front-loading to try and get ahead of tariffs and any sort of supply chain woes. But how does it set up in terms of the backdrop of expectations for the rest of the year?
Well, it was a soft headline, as you mentioned, Heidi, that negative 0.3%. Compared to the average of 3% in the previous few years. As you mentioned, it did reflect this big jump in imports as people tried to buy their products to get ahead of the expensive tariffs. I think there was an increase of just over 40% in annualized terms in imports. That was the biggest in 5 years. And of course, when you're buying products that are not made in the US and you're sourcing them from overseas, that subtracts from your GDP. So that's, as you mentioned, that's why the headline GDP was weak. But when you drill into the numbers, actually under the bonnet, there were some clear signs of strength. There was strong consumer spending. Business spending on equipment is also quite strong, reflecting the computer space and the aviation space and a few others. So all of that suggests that going to this quarter that we're in right now should actually see a rebound. If providing this front loading of tariff effect is out of the system, the current quarter of GDP should see a rebound. But then, of course, you get into the whole story about when these tariffs really kick in earnest over the coming weeks and months. What will their impact be on inflation? By extension, what will their impact be on company investment and on consumer demand? And then, of course, what will that mean for growth? So this headline GDP number, people are looking in the rearview mirror, really. It's all about where the numbers go from here in the months ahead.
How is inflation trending? Because that will make a key difference on what the Fed does next, right?
Yep, we had some, the PCE index came out today. That's, of course, the all-important one that the Fed does look at very closely. That was a good number, a good reading, suggesting that price pressures are headed in the right direction. At the same time, of course, we had that strength on the consumer side of things as well, so suggesting, as I mentioned earlier, that the economy is not in a completely bad spot. And you heard President Trump making the point there that, quite apart from blaming President Biden for some of this, he was saying, give this time to see where it settles. It's going to take some months to become clear. And I think a lot of economists are probably in agreement it will take months to become clear, but there's certainly no agreement in terms of where all of this will land. Now, with inflation where it is, perhaps in the months ahead, if these tariffs are impacting demand and growth, that might give some wriggle room for the Fed, of course, to ease policy if they see the need. But really, we're going to have to see, I think, quite a few more readings of cool PCE to give the Fed confidence to ease, given how they've been warning about not just the uncertain impact of tariffs, but they've been warning that they continue to keep a close eye on inflation as well.
How much wiggle room does the central bank here in Japan have at this point? Because we saw some strengthening of the yen, but at the same time, of course, we continue to discuss this uncertainty over tariffs.
Yeah, I mean, Japan is interesting because I think it's one of the few, it's the only major central bank that's still supposedly in the tightening monetary policy phase. Obviously, there's no expectation that they will change policy today. It's going to be all about the signalling and the messaging from Governor Ueda in the press conference in terms of just how is he viewing the current trade war? How will it impact Japan? What might that mean for policy? And to your point, what commentary will he give around the yen in terms of its impact on tradable inflation? Now, the most important thing with the Bank of Japan today, of course, will be the new economic forecasts, the new projections for growth and inflation. That will obviously give the BOJ watching community some new data to hang on for the months ahead. No near-term indication of a policy change. It's more about how Japan is viewing the impact of tariffs and trade. And that will be very interesting because, remember, Japan is supposed to be well up the list in terms of getting a deal done with the US. So I think a lot of people overseas will be closely watching Governor Ueda's comments on trade. And I can only point to the remarks by South Africa's central bank governor here last week in Washington when he said that uncertainty is the new certainty for central banks.
Bloomberg's global economics correspondent and Karen there. Well, Bloomberg's learnt that the US and Ukraine have reached a deal over access to the war-torn nation's natural resources. Kyiv is hoping that the agreement will secure President Trump's support in ceasefire talks with Russia. For more, Bloomberg national security reporter Daniel Flatley joins us now from Washington. And what do we know about this in terms of how much this progresses the ceasefire effort, given that we've also had reporting that Russia is on sort of quite a different page in terms of its border expectations?
Yeah, no, I mean, it's a very good question to be asking at this point. I think that from the Ukrainians' perspective, this was a key agreement that really they needed to get in place before they could start talking about moving beyond, what we've seen so far in these peace talks. President Trump has really made this critical minerals deal or economic development deal or reconstruction agreement, whatever you want to call it, kind of a cornerstone of U.S. support for Ukraine. And really, he's kind of pitched it as this idea of the U.S. getting something out of what he views as the investment that it's made in Ukraine over the last several years. So I think that both sides really were trying to get something out of this for their constituencies back home. And where this goes from here sort of remains to be seen. I mean, there's still some very sticky points to be negotiated with the ceasefire agreement. And certainly we have not seen Russia necessarily being willing to give up some of the goals that it had at the beginning of its invasion of Ukraine, and Ukraine really wanting to solidify and cement this security agreement or this economic cooperation agreement with the U.S. So it was an important step today, symbolically, but where it takes us from here is still a bit of an unknown.
Yeah, but at least we know that President Trump really seems to need a win at this point in some sort of front, right? Whether it's geopolitics or trade. Could we expect something coming from the European Union? We are hearing of a package of proposals.
Yeah, on trade, obviously, Trump and his team are negotiating deals with, as many as, at times they've talked about 100 countries. But we really know from what Treasury Secretary Scott Bessent has said that there are somewhere between 15 and 18 countries that they're focusing on, and they're sort of putting China to the side. So let's call it 15 to 17 countries. One of the really big sticking points in all of these negotiations are the negotiations with the European Union. And that's because, as Secretary Bessent has said in some of his media appearances this week, there's some internal discussions that have to happen within the EU before the US can begin to negotiate with them. So I think what we're starting to see here is the contours, to borrow Bessent's phrase, of a deal with the European Union that may, the beginning of the talks between the bloc and the US, because Trump likes to do unilateral or bilateral trade deals. He doesn't really like these kind of multilateral deals. So the European Union, though, is a bit of a special case, because in order to get some type of effective deal with the EU, you have to basically work within the bloc and within its rules and all of that. So I think we're seeing a little bit of movement that should give the markets some encouragement that these trade deals are moving along. But again, it's the substance. It's what's in these deals, whether it's India or Japan or the European Union or potentially China at some point. The devil is really in the details. So, they've given themselves a timeline. They've given themselves 90 days. They've exhausted some of that time already. So we're really looking at midsummer as being the point at which they're going to have wins. They may need them for symbolic purposes now, but they're really going to have them for economic purposes as we get there to the middle of summer.
But actually,
Bloomberg's Daniel Flatley there with the latest. And coming up on the Asia trade, JPMorgan Securities Japan joining us for more on today's BOJ meeting. Pepperstone Group will also be along with us to tell us why they're selling these rallies in US equities. But before that, Microsoft and Meta defying tariff concerns with stronger than expected quarterly results. We get some more on those numbers and the outlook next. This is Bloomberg. Take a look at the two tech stocks that we've been following in the after-hours session. Of course, some good news coming through when it comes to both Meta and Microsoft. Meta initially jumping quite strongly at advertising, spending on AI, really defying these ongoing broader tariff concerns with the Wall Street estimate being beaten. We did see some of those gains being paired with reduced spending out of Asia. We also saw that big surge when it comes to strong quarterly cloud sales growth out of Microsoft driving that rally as well. Let's bring in now for more on Meta's results, Sarah Fryer, who leads our Bloomberg Big Tech coverage. So, Sarah, what really jumped out at you when it comes to these numbers, and does it suggest resilience as we get kind of deeper into these broader macro uncertainties?
Well, what's interesting here is while a lot of other companies are pulling back on their guidance or declining to even issue guidance, Meta just went right ahead and said we'll be spending more on infrastructure. They're not backing down on their AI spending plans. They're going to spend as much as they plan to, and it'll just be more costly for them. And they also gave guidance for the current quarter that was in line with estimates. So for those watching Meta, it seems like a bit of confidence coming from them that they'll be able to weather this storm. They have the resources to do it, and maybe even have an advantage in that they have this very stable advertising business that continues to grow, continues to get better actually as they invest more in AI, improving the personalization of those ads. So I think that they struck an optimistic tone while a lot of their peers and others in the global economy are really slowing down.
Tell us a little bit more about the fundamentals of this confidence. I mean, how are their existing products doing without considering the future revenue coming potentially from these AI investments?
Well, the AI investments at Meta are already improving their core product, making the algorithm serve you better content that's more likely to entertain you. It's improving the targeting for their advertising. So we're already seeing their investment in AI really build their core, which is something we might not see it at some of their peers. They've really integrated it. In terms of the wider market, though, they don't really have a cloud business. They don't have they have a chatbot, but it's free. So I think generally for Meta, you're not going to see like an AI product get sold. Their open source model Llama is, they've released models, but it's unclear what they will benefit from financially from that. It's really more about taking the lessons that they've learned in AI and integrating them back into the core business, and then eventually making some money off of augmented and virtual reality, which has been a very long time coming. In fact, they said one of their next areas of growth for their business is just going to be business messaging in apps like WhatsApp. So that's something they've been promising for years. So really they have had a lot of time to build out what they want to do for the future, just because their advertising business continues to grow so strongly.
Sarah Fire, who leads Bloomberg's big tech coverage there, with the latest when it comes to Meta's numbers. It was good to have you with us because we have to check on Microsoft now. I reported stronger than expected quarterly sales and profit growth fueled by high demand for its cloud services. For more, let's bring in Bloomberg's Spencer Soper. Spencer, so we know that there was also a cloud commitment coming from OpenAI that was included. Give us some of the biggest takeaways today.
Yeah, the big one is clearly just the Azure performance, beating with sales growth of 35% on a constant dollar basis. And so that really blew analysts away. They were almost gushing on the call, congratulating the company on its performance. And so they're just looking for any pockets of resilience. You had this tariffs and so much uncertainty through the system that delivered this shock to the overall financial system. And now they're really starting to look to companies for clues on where those lines are being delineated, and Microsoft sent a message that it's doing a lot better than its peers, due to its strong cloud computing performance, and it's not seeing a pullback on that yet.
Investors, though, do seem to be concerned that the company is getting ahead of itself in terms of data center investments. Do the results sort of soothe some of the worries about spending?
Yeah, that's a good point. I mean, heading into this, and you just think about this is going on for several quarters now, this kind of AI arms race and Microsoft's alignment with OpenAI, just that they're build, and are you going to get out ahead? And then Microsoft actually pulled back a little bit, dialed back its data center investments, which made those fears intensified them. And so now what we're seeing is that with the numbers they've reported is that they're able to dial down that AI spending a little bit, but still deliver very strong growth. So investors are happy with what they're seeing and how Microsoft's navigating the tightrope.
Spencer Soper there with the latest on Microsoft, as well as we continue to watch these big tech earnings. Well, Qualcomm, for one, fell in extended trading. It gave a tepid revenue prediction for the current quarter. The company says sales will reach as high as $10.7 billion, but the midpoint of that range missed average analyst estimates. The outlook renewing concerns that the smartphone market will suffer as this trade war unfolds.
Right, Heidi, Nvidia CEO Jen-Hsun also saying that President Trump needs to change so-called diffusion rules over the export of AI technology. Huang's company is currently banned from selling its most advanced chips to China. He spoke to us in Washington as tech executives held a forum with U.S. lawmakers.
In order to produce $500 billion worth of AI infrastructure requires enormous amounts of investment from a lot of different partners. And so we've brought on shore many partners to help us do that. And we're going to have to build our own factories in order to do that.
What's your message and conversation going to be like today with the president when it comes to tariffs?
I'm going to count on the fact that the administration has a good plan. And from our perspective, we would like to have policies that support and help accelerate the development of artificial intelligence in this new industry.
Do you think they're going to have an edit of the diffusion rule that was under the Biden administration, basically placing all these different countries in different buckets?
Well, I'm not sure what the new diffusion rule is going to be, but whatever it happens to be, it really has to recognize that the world has changed fundamentally since the previous diffusion rule was released. We need to accelerate the diffusion of American AI technology around the world. And so the policies and the encouragement from the administration, it really needs to be behind that.
We also asked Jen-Hsun for his view on China's rapid progress on tech and AI.
China is not behind.
Anybody ahead of you?
China's right behind us. I mean, we're very, very close. But remember, this is a long-term. This is an infinite race. There's no, in the world of life, there's no 2-minute end of the quarter. There's no such thing, and so we're going to compete for a long time.
Nvidia CEO Jen-Hsun speaking with our colleague Anne-Marie Horduran in Washington. We have more ahead. This is Bloomberg.
Let's get you caught up with the latest on the corporate front. And some European automakers, including Stellantis and Mercedes-Benz, have withdrawn their financial forecasts for this year due to uncertainty around US tariffs. Volkswagen left its outlook largely unchanged, but says it has not factored in the levies. Car makers have struggled to tally the cost of the tariffs as the Trump administration changes its position. Ford will not be increasing the price of its vehicles until it sees how its competitors respond to higher costs from US tariffs. The company had earlier planned to raise prices in May. CEO Jim Farley now says Ford will detail how much the levies will increase its costs when it reports first quarter earnings next Monday. Airbus says it won't cover the cost of tariffs on its planes imported by US airlines, setting up with a clash with those carriers. The planemaker's CEO, Guillaume Faury, says its customers are not willing to pay the levies, but that's on them. Airlines include Delta, and they say they won't pay the extra costs, but are finding workarounds, such as routing new aircraft through another country first. More ahead here on the Asia Trade. This is Bloomberg.
Thin trading today across markets in Asia. We do have a few close, including China, Korea as well, Singapore as well close. But take a look at how we're setting up for the Japanese market opens. Nikkei futures pointing to the upside after 5 sessions of gains, the longest winning streak since August. The Japanese yen holding steady, a narrow trading range. Of course, we do have big Bank of Japan policy day, although not much expectation for any sort of change. All 54 surveyed economists expecting the BOJ to hold the interest rate steady for a second straight meeting at 0.5%. Governor Ueda has pledged to be mindful of the heightened uncertainties given, of course, the ongoing trade uncertainty. Let's bring in Ayako Fujita, Chief Japan Economist at JPMorgan Securities. Ayako, always good to see you. The Bank of Japan prioritizing now perhaps some stability, given, of course, all of the tariff uncertainty?
Yeah, I think actually certainly actually BOJ has to pay attention to Liberalization Day, but before Liberalization Day tariff announcement, actually BOJ hinted actually the kind of possible actually upside risk of inflation. So it's kind of indicating a possible acceleration of the pace of rate hike. But with this uncertainty, actually, BOJ does not necessarily have to accelerate. Actually, BOJ has to really actually focus on the uncertainty at this point.
The IMF also told them to just be flexible with your policy, right?
Yes.
And at least the Japanese yen has strengthened a little bit, so that gives them a little bit more leeway.
In that sense, yes. Actually, BOJ may not be actually pushed actually to deliver rate hike because due to from the currency market, and also actually current level of the currency is probably relatively favorable level for the Japanese economy because both for exporter and also domestic consumers. So in that sense, actually, BOJ can really actually have a time to really assess actually whether or not actually they can really deliver actually rate hike at this point.
What hints do you expect to get from the quarterly economic report?
Yeah, I think actually BOJ has probably revised down their growth outlook, but actually probably BOJ will maintain the relatively actually positive outlook, actually at both potential growth rate probably around 1% level. But actually BOJ probably may not have to change actually inflation outlook, which is more important for actually BOJ's policy going forward.
Ayako, it's interesting you talk about this deliberately kind of modest behind the curve approach, right? And what's also been behind the curve is the ability of households and consumers domestically in Japan to keep up with rising inflation, even with significant wage gains. Do you expect that gap to close, or is that something that the BOJ is sort of as concerned about as these broader global uncertainties?
I don't expect actually BOJ's actually deliberately modest behind the curve policy to change actually immediately, and particularly actually with this uncertainty actually there are no reason for BOJ to rush. So BOJ will continue to actually to be relatively cautious in terms of timing of the rate hike. But still, actually, the current level of the policy rate is quite actually accommodative because 50 basis point actually against actually 3%, close to 3% inflation is actually quite accommodative. So I think actually BOJ still has likely to maintain actually their course that actually BOJ at least need to actually bring the policy rate around the neutral level, which is actually 1% at minimum.
Do you expect wage growth to continue being significant, and will that eventually, drive that ability for households and consumers to be able to keep up with inflation?
Yeah, that's actually clearly actually a key actually factor for actually the economy and also actually inflation as well. And spring wage negotiation result we received so far is quite positive. So which means actually probably the wage run rate will continue to rise from the current run rate of around 3% level. So above 3% wage run rate is actually quite actually strong actually compared to BOJ's target of inflation rate of 2%. So which means actually, probably I think actually inflation will continue to be actually relatively sticky, and also actually, the economy will probably actually, get supported from actually these recent wage gains.
We have seen really wild gyrations in the bond market as well. And of course, the super long end of bond yields here in Japan also shooting to, 2-decade highs or so.
Yep.
Will we get a sense of what the BOJ is thinking about the functionality of the JGB market?
I think actually, BOJ is not particularly concerned about actually decentralized in the super long end of the curve, because clearly actually BOJ's intention to actually, as of last year, actually intention to start QT was actually, bringing back actually market functionality, which means actually more volatility in the market and probably actually high rate compared to actually the YCC period. So in that sense, actually, BOJ may not have a clearly actually strong intention to intervene in the market, even with the recent actually spike in the super end of the longer end of the curve.
Ayako, what are the expectations when it comes to how the yen sort of plays into a lot of these questions, right? Because exporters have been getting a little bit more respite, but there's so much volatility around where the US dollar expectations are at the moment.
I think actually, in terms of level-wise, actually probably around 140 level is more favorable level for actually, even for exporters. And also actually, of course, actually, exporters are more concerned about actually, potential weakening of global demand, which is actually quite painful. But currency-wise, actually, 140 is not very painful level because actually still actually, Japanese yen is relatively very much competitive actually against other countries. So I think actually, and also on the flip side is actually clearly actually 140 is probably favorable level for domestic consumers because last year domestic consumer has suffered a lot with actually weak yen and also actually quite strong actually import price actually inflation. So in that level, I think actually in that sense actually the current actually currency is not a particularly concerning factor for Japanese economy as well as actually BOJ's. And also, actually, in terms of actually trade talk, I think clearly actually currency stability was an issue, and actually the kind of talk between U.S. and Japan will continue. And clearly, actually, the kind of broader agreement is maintain stability of the currency, which means actually we will not actually both U.S. and Japan may not prefer to have a kind of experience we experienced last year, like 150 or 160 level. So in that sense, actually, if BOJ doesn't deliver a rate hike or BOJ will not maintain actually the cost of policy normalization, we will potentially have a risk that the currency start to depreciate again. So to avoid these kind of things, actually, of course, actually, this is also one of the factors for BOJ to need stick on the cost of policy normalization.
It was interesting because we did have that line talking about the yen being more likely to affect the inflation outlook in the previous report. And I guess should we be watching for more nuance around how they treat that, because the direction of the yen has obviously changed since then and there's a great deal of uncertainty as to where it goes from here.
One thing is actually because the question is actually whether or not actually inflation response to the currency is asymmetric or symmetric. And actually, because, of course, actually, when yen depreciate a lot, actually, we clearly see, and also BOJ clearly see the kind of stronger, actually, the pass-through, from currency to inflation. But actually, because actually, there are still a lot of carried over, actually, the inflation pressure in the domestic economy. So even if actually, even the currency appreciate a little bit, actually, because, we don't think actually, that this will actually have a significant impact on inflation to dragging down going forward.
Ayako Fujita, Chief Japan Economist at JPMorgan Securities. Really good to have you with us on BOJ Day. Of course, you can find out more about the decision later. Subscribers can go to the function TLIV Go. We do have an alert on the Bloomberg right now. We are getting the latest coming from both Seven & I Holdings as well as Alimentation Couche-Tard. Seven & I now saying that the detailed terms of an NDA remain confidential, as Couche-Tard has also confirmed that they have signed an NDA with Seven & I in progressing these talks forward. Alimentation confirms that the company has signed that NDA. Remember, we continue to follow these negotiations as the operator of 7-Eleven convenience stores is in the middle of a restructuring to boost growth, and shareholder value has become the target of buyout by Alimentation Couche-Tard in Canada. Couche-Tard now saying that they appreciate Seven & I's panel engaging in these discussions. Seven & I has provided access to diligence from Seven & I's side. The statement coming out saying that they're unlocking significant value, that remains a top priority for the company. Seven & I saying that they remain committed to pursuing two parallel paths, of course, as they try to fend off that buyout, but at the same time they're engaging in conversations with Couche-Tard. We have more ahead. This is Bloomberg. It's BOJ Day here in Japan. The expectation right now for revision downwards on its growth forecast at today's meeting. Local media reporting that could happen today, given that, of course, we continue to watch trade negotiations with the Trump administration as well. Let's bring in our Japan South reporter, Alice French, to tell us what are investors watching from this decision.
Right. So we already know that, the majority of the market is expecting the BOJ to hold rates today, and that seems to be already pretty priced into stock prices here. But what traders will really be looking for is any language from Ueda later this afternoon about any change in pace of future rate hikes, right? So after Trump announced those reciprocal tariffs a few weeks ago, we saw particularly bank stocks really tanking in Japan on worries that the BOJ might have to slow down or even pause those rate hikes. So we'll really be looking at the language from Ueda and that sort of the speed of the future trajectory of those hikes.
You mentioned bank stocks, so what's the outlook for them given the uncertainty with the BOJ?
Absolutely. So, bank stocks were among the Topix's best performers so far this year until Trump announced those tariffs. They've really benefited in their earnings from, higher borrowing costs, and they've been upping dividends, upping shareholder returns, and that's really attractive to investors. But as you say, as the outlook for those BOJ hikes becomes more cloudy, investors feeling a little bit less confident about piling into those bank stocks. If we do see, the BOJ holding today and coming out with some more sort of comforting language from Ueda, I think we might see some repurchasing of those bank stocks. They're now amongst the lowest performing on the Topix, and so they've really got a lot of clawing back to do, and they have been underperforming. But, we've got earnings coming up, and they should still see some boosts from the rate hikes that we've seen so far, and I think that will help support that sector.
So it sounds like we are still seeing some sort of domestic fundamentals play out when it comes to how Japanese equities are trading. Can we talk about kind of overall the sentiment or perhaps a sense of fragility with this ongoing uncertainty?
Yeah, absolutely. So, in the month or so that we've seen since Trump announced those reciprocal tariffs, actually Japan has managed to claw back its losses. On Monday, we saw the Nikkei and the Topix kind of back around the same position that they were before that April 2nd announcement. So they have been actually relatively resilient. They actually got back to that same level quicker than the S&P, quicker than some markets in Europe. And I think really what's been helping that is the fact that Japan was amongst one of the first countries to approach Trump for negotiations, right? We know that those trade talks are ongoing. We've heard from government officials that specific currency levels haven't been requested by the US yet, and that's kind of slowed down some of the appreciation in the yen that we saw, and that's really provided an extra tailwind for stocks. Of course, the outlook is still uncertain. There's still a lot of caution amongst traders here, but I think sort of that hopes that those trade talks might lead to negotiations and could potentially lead to some special treatment of Japan by the US is helping to buoy that optimism going forwards.
And I guess everything is really relative, right? When every market seems like they're going to get hit by these trade negotiations. But in the long term, does the fact that we have seen so much optimism about the fundamental changes in corporate governance in Japan and so forth, is that going to keep those rosier outlooks from analysts on the market?
That is what we're hearing, yes. We know that a lot of investors and funds are looking to take money out of the US at the moment with all the uncertainty, and Japan is still looking like an attractive alternative. You were just mentioning, of course, Seven and I. We have been seeing more of this kind of M&A activity, this dynamism in the market. We're seeing more shareholder returns, more buybacks, and like you say, these corporate governance reforms are really driving a lot of optimism around Japan. Of course, Japan will have to keep that momentum going. There's still a lot of particularly smaller cap companies that are yet to catch up with that trend, but overall that is definitely boosting the attraction of Japan for those global investors, and I think that should carry them forward throughout the year.
Bloomberg Japan stock reporter Alice French. Well, the outcome of Australia's tight federal election on Saturday could be the next catalyst for local assets amid the global tariff standoff. Bloomberg's Paul Allen joins us now for a look at the possible outcomes, and what it could mean for markets. And, it's quite interesting trying to look at the winners and the losers, but where do you see the sensitivity?
Well, it's going to be close, as you mentioned. The most, as possible, the Albanese government gets back with a slim majority. The path to power, much more difficult for the Liberal National Coalition. They would need to pick up 23 seats. So whichever way we slice and dice this, minority government's looking like a very possible outcome. Now, that means there's a price to pay for support from minor parties. There'll be policy concessions. Fig security says that could mean wider deficits, higher bond yields as well. Areas of commonality between both parties, they're both offering tax relief. So that would be good for consumer stocks. So we can watch the likes of Coles or Woolworths, JB Hi-Fi. Both parties also making promises around health and supporting Medicare, the universal healthcare scheme. So Australian clinical labs, internal diagnostics, those sorts of stocks could also perform quite well.
Paul, both major parties also making promises to address Australia's housing shortage. How can investors trade around that?
Always promises around election time, and somehow nothing concrete ever seems to materialise, really. Anthony Albanese promising lower deposits for first home buyers, $10 billion to build 100,000 new homes. All sounds very exciting. Opposition leader Peter Dutton, meanwhile, saying he'd permit first home buyers to deduct mortgage payments from taxes for the first 5 years. And, it could be argued that it was exotic tax concessions around property which helped get Australia into this mess in the first place. But if we take a look at the construction side of things, on the surface, that would mean Stockland, Mirvac, Lendlease could perform pretty well if those plans go ahead. But everywhere you look in Sydney at the moment, you see construction cranes. There's a question about who would build these houses. There's a skilled labour shortage. Material costs are very high. And it's these sorts of questions around construction as well, which throw a rather harsh light on Peter Dutton's plan to build nuclear reactors. There's a number of reasons why there's some scepticism over that pledge. But if you take a look at energy shares as well, they've been some of the worst performers in Australia this year. The coalition favours gas, investment in traditional energy. The Labor government proposing more investment in renewables. So on the energy side, you could look at the likes of the old favourites, AGL, Santos, Woodside, Origin as well. Might move after this election result.
Bloomberg's Paul Allen there. Of course, our coverage of the Australian election build-up continues tomorrow. We'll be discussing how the housing crisis is influencing voters with the CEO of Metricon. They're Australia's largest home builder. Of course, alongside the cost of living crisis, the property crisis and the affordability crisis have been front and centre in this campaign. A former Labor strategist will be joining us as well to talk through the latest polling, whether the country could be headed for a minority government. Well, Hong Kong Exchange CEO Bonnie Chan says she's expecting the city's IPO boom to continue despite volatility in the markets. She told us exclusively that the exchange is weighing dozens of applications and is bullish about a flurry of secondary listings this year from mainland Chinese firms.
We have about slightly over 150 applications being processed, which is a very high number, I would say. But I see two big trends emerging. The first one is the fact that a lot of companies which are already listed in the domestic Asia market, they're now looking to also pursue an additional listing in Hong Kong. There are a lot of reasons behind that, but one big advantage of having an offshore listing status is that, therefore, it will give them a fundraising platform. And that could support their expansion plan overseas. Many companies in China are pursuing what is called the +1 strategy. So I think that's a big attraction to them. So in the pipeline, we have probably over 20 of those companies which have already filed, and another 20 plus which have already announced their plans to pursue an additional H-share listing. Even with all that volatility, and they are pretty dramatic, our market has demonstrated a lot of resilience. In fact, there was, this day when we experienced, quite a big correction. It was also the day that we've recorded record trading volume, and it was only a couple of weeks ago. However, I think probably a less noticed fact is that even amidst all this volatility, deals get done. We have in the past few weeks priced and successfully listed another handful of companies on our exchange, and the pipeline continues to build. So no signs of the appetite abating.
HKEX CEO Bonnie Chan speaking exclusively to our colleague David Ingles. We have more on the Asia trade. This is Bloomberg.
The This is the Asia Trade. A reminder that markets are closed today, much of Asia for Labor Day, including in Korea, Hong Kong, in mainland China and in Singapore. And of course, many of those markets are also headed on what are major holidays, particularly when it comes to the kickoff of this Golden Week in China. Take a look at what we're watching when it comes to markets that are still trading at the top of the next hour. Here in Australia, we have seen some pretty good gains. In fact, that stretch of gains we could see a little bit more muted today as we head into really the last 2 days before the Saturday election. We've had a lot of pre-voting already, polling suggesting that we will see the re-election of the Labor government under Anthony Albanese. But of course, we do know that some of the polls can turn out to be quite different when it comes to the actual voting day, and that margin could actually end up being quite slim. So a bit of uncertainty playing out there when it comes to the start of cash trading here in Sydney. Nikkei futures are by just about 0.6% there as we continue really to monitor some of the tariff implications. We're hearing of potential deals being presented by Europe to the US and whether that drives sort of further progress, if you will. We're watching a lot of the tech names, given we had the surge in Meta, in Microsoft on the back of some pretty strong numbers there. That boost is expected to come through, as well as watching, of course, further sectors like car makers, given some of the implications from these tariff developments. S&P futures at the moment are by just about 0.8%. We did see some earlier pressure in US stocks, given what we saw with the GDP numbers and the concerns about the tariffs now having that real impact on economic growth in the US. But global stocks at the moment hitting that 4-week high on the back of the US rebound, Shery.
And take a look at some of those specific stocks that we'll be watching when trading starts in Japan. Keep an eye on Tokyo Electron after it reported full-year operating income that beat estimates. Bloomberg Intelligence now saying that a growth in Taiwan and South Korea might offset weakness in China. Mitsubishi UFJ Financial is also on our radar after it reported record preliminary profit driven by gains from sales of equity holdings and reversals of loan loss provisions. Also watching Sony Group. It says it has no plans for a partial spin-off of its chip business, quote, at this time. And Alimentación Couche-Tard has confirmed that it has signed a non-disclosure agreement with Seven & i on the progress on those transaction discussions. Of course, the company has proposed to buy Seven & i last year. The market opens in Sydney and Tokyo are next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens after we saw that positive lead-in from Wall Street. Another session of gains with the S&P 500 reversing almost a 2% loss. So really a lot of volatility, Heidi, as we can expect with the U.S. markets. Given also mixed economic data, first quarter GDP shrinking for the first time since 2022. But at the same time, we actually saw some positive data coming from consumer spending. Also inflation sort of moderating as well.
Yeah, the question is how those indicators hold up, right? Particularly as we're looking at a pretty tough backdrop going into the second half of the year where, you know, the supply issues may start to materialise with the front loading starting to fade as well. But Shery, elsewhere we're watching geopolitics as well, potentially some progress being made when it comes to that Ukraine-Russia ceasefire.
Yeah, we're watching geopolitics. We're watching, of course, the trade tensions ongoing, what President Trump is doing when it comes to those tariffs, and perhaps some of the first really fallout when it comes to trade and South Korea being the bellwether of global exports. You can see right now for the month of April is a growth of 3.7% for those export numbers year on year. Surprising to the upside, accelerating from the previous month. And the expectation here was for a contraction. This is really interesting because we have seen South Korea and manufacturers and really those businesses front load some of those exports to broader markets before these trade tariffs kicked in. But even for the month of April, despite those concerns, we actually are seeing growth in those export numbers from South Korea. When it comes to the trade surplus coming in at $4.88 billion US dollars, which is also wider than the expectation. Imports falling by a smaller than expected 2.7% year on year. This, of course, as South Korea is away on holidays, but we have seen the Korean won rising and extending those gains in the best month in about 2 years. Take a look at how Japan is coming online. One of the few markets that's still open across Asia. We do have Korea away on holidays, Japan, China away on holidays, not to mention Singapore as well. Right now, the Nikkei gaining 0.3%, extending those 5 sessions of gains that we saw already. We're at the longest winning streak since August of last year. The Japanese yen holding at that 143 level. But of course, today is Bank of Japan Day. The expectation is for a second straight meeting of no change, Heidi.
Such a difficult time when it comes to central banks. So we're watching for the signalling and the communications from the BOJ very closely. But here in Australia, this is a setup as we get into this session, just a couple of days out from that federal election, the vote taking place on Saturday. And polling still looking pretty close at this point when it comes to the possibility of a minority government being secured by the Labor government. But we are seeing a bit of a muted start. This, though, coming after 5 sessions of gains for Australian stocks. We had 5 sessions of gains despite some inflation concerns about hotter than expected inflation coming through yesterday. At the moment, we're also seeing the Aussie dollar on the front foot, and certainly for the US dollar, the greenback looking at its worst month since 2022. And so a lot of other trading pairs on the other side are seeing the benefits. We're also watching what's going on with treasuries, and certainly Australian bonds looking like we'll see on track to follow treasuries higher after we saw the move after the worse than expected headline GDP number. Shery.
Let's bring in our next guest who's selling the rallies in U.S. stocks and the dollar. With us now is Chris Weston, head of research at Pepperstone Group, and really to do with perhaps this veering away from U.S. assets that we're seeing right now?
Well, we're not seeing a huge amount of evidence of repatriation flows. I mean, we look at Fed data, TRC data. We have seen some migration, but it's not been anything that's been hugely noticeable. Obviously, we've seen that in the price action in the US dollar, although that has now stabilised, and we're seeing the Dixie sort of trade a range of 100 to 98, and that seems to have settled down. I think the payrolls number on Friday could be very, very influential on that. But yeah, I mean, there's been so much talk about repatriation of assets and this massive concentration of global pool of capital that maybe we're looking to find a home. But we're not at this stage. We haven't seen any really confirmed or shocking evidence that that's really materialising at this stage.
Where do you hedge for all of these uncertainties surrounding trade, tariffs, and of course even central bank action today with the Bank of Japan normalizing policy for the rest of the year?
I think the Bank of Japan will be somewhat of a non-event, to be honest. I mean, they're not expected to do much with policy. There's 50 basis points or so being priced in by the end of the year, and that still seems to be a sort of a bit of a moving target, even though, Japanese investors can get some decent yield at the end of the long end of the curve. Where do we go? I think we're in a bit of a transition period at the moment. Obviously the tariff news is very much skewed towards the positive side, and we think that's going to be the case for a while. I think that market will still have to differentiate between a deal and actual firm agreements. There is a major difference between the two. We see deals more of a ceasefire rather than something that's more longer term, and I think people won't trust that going forward. But that still needs to be fully priced in. I think there's probably a bit more juice to the upside in equity markets. I think a lot of what we saw recently was premised on short covering, low volumes on the way up, and obviously people reacting to the better or slightly worse than less or better than feared tariff situations that we can now price the risk to, and people have been covering those volatility trades as well. But now I think that's sort of been superseded by slightly better earnings we've been seeing in the tech space, and I think we could probably push up to 5,800. But we're looking to protect ourselves. Treasuries are working again. The front end's looking good at 360. I think that's probably fairly priced, but people have been hedging themselves there. I think volatility is starting to look attractive again with the VIX at 24%. And I think you could probably see maybe a little bit upside in the US dollar in the short term, but I think volatility is the play, and also a bit more weakness in the gold price. I think probably starts to look attractive again.
Do you think the recent calm, and I guess relative calm should be a way to caveat it, does that make you feel that maybe there's a bit of complacency creeping in?
I'm not sure if complacency is the way I'd go. I mean, I think people got very bearish on CTAs. We're obviously max short in futures. People have been very long volatility. They've closed out that, they've pulled in that distribution in the tails. I think tactical shorts have obviously had to cover that situation, and we've seen evidence of that in things like the Goldman Sachs most short interest baskets up 24% from the recent lows. And I think, if you look at the earnings season, it's been pretty good. I know, the number of companies beating EPS are in line with historical average, around 75%. But the companies that have rallied on, the companies that have beat, well, we've been seeing about 60% of companies rallying on the day there. And I think that perspective has been okay. And we're obviously passing on to Apple and Amazon, and the bar is a little bit raised, a little bit higher from that situation, given what we've been seeing from some of the other earnings. But I wouldn't say complacency is the word. I think you've seen a big position adjustment that's becoming a much more neutral situation. And that's why I say if we get a bit more of a squeeze up post further earnings, a bit more tariff news, I think we get to a point then when the economic data really starts to bite home. Because the big debate, of course, on the moment is whether we're going to see a muddle-through scenario, things are going to be less bad than feared, or we actually do see a recession and look like we're going to see a higher probability of a recession, in which case earnings in the US are just too high. We're not going to see 10% EPS growth this year. We're not going to see 14% EPS growth next year. Those earnings need to come down if we are going to price a recession, and it's the hard data that gives us that. And we're not going to get categoric proof of that really until we get the May series, which doesn't come out till June. I know we've got payrolls coming up on Friday, but that's the big conjecture is, are we going to see a recession or not? It's almost binary, and if we are, then earnings are too high, and we trade markedly lower from that point, which is why tactically I feel a bit more of a squeeze in the S&P up to 5,800 captures a lot of that goodwill earnings, and I think then it sets us up really nicely for that big debate that I just talked about.
Chris, of course, we're also headed into the weekend election here in Australia, and we know that in terms of stock trading, it tends to be fairly sanguine. But what are your expectations, and are there ways that you're trading around a likely result?
Yeah, I mean, certainly I don't see any real situation where the Australian dollar is going to be overly volatile by this situation at all. But I think from an equity perspective, look, we can look at the term structure of the ASX options. Options that are expiring today relative to the 8th of May, which is the next expiry. I know it's not ideal, but there's no real premium between the two in terms of the implied volatility. So the market's not really expecting huge volatility from that, and that's the same with CBA options and various factors there as well. So I think that's really down to the idea that, if you look at the polls on two-party preferred basis, they were very accurate in 2022. There's no reason to believe they shouldn't be reasonably accurate this time around, and really, the high probability situation that the betting markets are telling us is either we're going to get a majority for the ALP party, which in case you may see a little bit of relief coming through in Australian equities because it's the status quo. We know what we're getting. They're a known entity. Or we get probably around 73 seats, which for the ALP party, which means they'll have to reach out to a couple of 2 or 3 independents, which makes life a little bit more complicated, but they should get it done, and we should have a reasonably functional government with a little bit more increased spending. I think probably where the volatility kicks in, if we were to be surprised, the ALP party gets higher than the coalition, but we were to see something, if we were to see below 68 seats, would be a big surprise. I think betting markets pricing at about a 15% probability. But that's when they need to reach out to more than 7 independents. That's where we start seeing big concessions, future legislation really struggling to be passed. And if they have anything less, then they have to reach out to the Greens. And I think that would be a big volatility event because you've seen so much of the GDP in the last 12 months being created from government spending. In fact, all of it's been created from government spending. The private sector is obviously seeing very anemic growth. 80% of the job creation's been in the public sector. If it looks like we're going to revisit 2010 under the Gillard minority government and we see a collapse in fiscal spending, that would be a volatility event potentially for ASX stocks.
Chris Weston, good to have you with us, head of research at Pepperstone Group, as we continue to watch a few names, especially in trading here in Japan. Seven & I is saying that they remain committed to pursuing two parallel paths when it comes to those conversations with Couche-Tard. They just released a statement saying that they have signed a non-disclosure agreement, these two companies, and that the detailed terms remain confidential, but Seven & I saying that unlocking significant value remains a top priority for management. Of course, they've been approached by Couche-Tard to buy Seven & I last year. We're also watching some of those moves around the earnings season. Tokyo Electron announcing full-year operating income forecast meeting estimates. Bloomberg Intelligence now saying that growth in Taiwan and South Korea should offset any declines in China. You can see it advancing more than 1%. And of course, we're just watching the broader semiconductor side of things, because Qualcomm also fell after giving a tepid revenue outlook for the current quarter. Not to mention that we did get some positive numbers out of the likes of Microsoft and Meta, which also rose in late trading after the results topped estimates. This is Bloomberg. Take a look at how Japanese assets are trading. Big BOJ day, no change expected today. You can see that Nikkei gaining 0.7%, being led higher by tech stocks, materials, and healthcare. And of course, we had some positive sentiment coming from the Wall Street session with Meta and Microsoft rising after solid earnings. You can see the Japanese yen really holding steady, trading within a narrow range. Of course, this after topping that 140 level against the U.S. dollar last week. But as I said, the Bank of Japan expected to hold rates for a second straight meeting today. Investors more focused on its quarterly economic outlook for clues on the trade war's impact. The Nikkei now reporting the growth forecast could be revised lower. Let's bring in Bloomberg senior editor Brian Fowler. And of course, we're watching the economic report and just what Governor Ueda says, right?
Yeah, exactly. So every economist, virtually every economist, is convinced we aren't going to see any kind of move to policy settings today. So all the focus is on the GDP forecast as well as CPI. We get a fresh batch of forecasts with the new forecast for the fiscal 2027. So that's going to be a real point of focus. Nikkei's story about GDP coming down, I mean, we've already seen the IMF cut its global outlook. We've seen the WTO say now it expects global commerce to actually contract this year. So the impact is real. I think we definitely will see the BOJ trim some of those forecasts. But the bigger question is, what does Ueda say about the outlook for inflation? We will be watching to see if he makes any comments about when he expects underlying inflation trends to reach the BOJ's target. And up until now, he's talked about the October-March period ending in March 2027. We'll see if he sticks with that or if he pushes it out a little bit.
Given that we have seen the latest CPI numbers, like Tokyo inflation just jump by the most in, 2 years or so, food prices also soaring.
Yeah, so, I mean, it creates a real dilemma for the BOJ. And remember that some of these underlying price pressures are coming from the structural changes in the economy. There's a very tight labor market that's forcing companies to push up wages in order to retain workers or hire new ones. And Ueda is very much aware of this, and he's talked about it in the past. Food prices, of course, are still very high and creating a lot of pressure for households. So he may find himself in a position where he does have to talk about proceeding with normalization of policy by raising rates. But the question is the timing.
And we have seen a lot of gyrations in the bond markets as well, given, of course, the trade uncertainty and just a global macroeconomic picture. Should we be watching sort of the language if he says anything at the presser around bond purchases?
Yeah, absolutely. That's going to be one of the focuses in the afternoon when he talks to the press. He probably will be asked about bond purchases and the pace of the BOJ's efforts to kind of cut those back, and we'll see what he says. But he probably will hedge his comments somewhat.
Bloomberg Senior Editor Brian Fowler there on BOJ decision day. Take a look at how futures in Europe are opening up at the moment. We see, of course, European stocks had gained for a seventh day amid a flurry of earnings, 7 consecutive sessions trading higher. They're up by just about 0.5% when it comes to the Euro 600 index there. At the moment, we're seeing a little bit more of a muted picture there. Euro Stoxx 50 futures off by about 0.3%. A little bit of positivity over there in Germany. We did see leadership across telecoms, media stocks, miners and banks, though underperforming. Some of those disappointing earnings from Glencore and Banco Santander there weighing. But of course, geopolitics is also front and centre for the region because Bloomberg has learned that the US and Ukraine have reached a deal over access to the war-torn nation's natural resources. Kyiv is hoping that the agreement will secure President Trump's support in ceasefire talks with Russia. For more, our Bloomberg News editor John Haidi joins us. And John, how much does this progress the ceasefire efforts and garnering Washington's support, given that we know that on the Russian side, Vladimir Putin might be expecting fairly different contours when it comes to what a potential peace agreement looks like?
Well, the eventual agreement, if when it occurs, it's still in the future. It's still very amorphous at this point. But this agreement does establish goodwill between the U.S. and Ukraine that both sides apparently were very keen to establish, or very, very, very keen to have, given President Trump's skepticism of the U.S. assistance to Ukraine since the Russian invasion began, and in particular criticism of President Zelensky of Ukraine. And of course, as you said, there were fears, or as you suggested, there were fears that the U.S. might walk away from a ceasefire talks involving Russia if this agreement, which President Trump mentioned just now in the town hall, he discussed with Zelensky at the Vatican during when they were both there for Pope Francis's funeral. So this agreement really reassures both sides, Ukraine and the U.S.
At the same time, we're hearing that a paper with some trade proposals is set to be presented by the EU to the US imminently. It's interesting, right, because we've seen sort of mostly Asian trading partners getting a head start on these talks. Does this kick off negotiations between the EU and the US?
Well, those talks have not yielded much, if any, progress so far. The Europeans apparently are going to propose bolstering investment by European companies in the United States, as well as a pledge to buy American goods involving technology, as well as liquefied natural gas. At the same time, however, the EU is preparing retaliatory measures to counter the tariff that Donald Trump has already imposed. And it's Liberation Day earlier this month, rather.
Bloomberg News editor John Haidi. We're just hearing from President Trump at the moment, speaking during the News Nation town hall interview, talking about trade talks with China, saying that there's a very good chance we'll make a deal with China, but that any deal with China has got to be on our terms. And of course, really reflecting the rhetoric that's come from the president, that's come from the likes of the Treasury Secretary, saying that that Beijing has to make the first move. Of course, all the signalling we've seen from the Chinese side is that there's not much willingness for compromise, and in fact, they're sort of focusing more on the diplomatic outreach to other trading partners instead. We do have much more ahead on the Asia trade. This is Bloomberg.
You're watching the Asia trade. UBS CEO Sergio Ermotti thinks investors may slow down investment plans if uncertainty due to tariffs continues for too long. His warning came as the bank's markets unit posted a record performance as traders cashed in on geopolitical turmoil and market volatility.
When you look at wealth management, asset management, and the investment bank, both delivered double-digit pre-tax profit expansion. Our core businesses had a combined 15% expansion. So I think that Of course, we saw a little bit of seasonality, positive seasonality, particularly in the first few weeks of January. I think it's fair to say that afterwards the seasonality factors were out and a high level of uncertainty and volatility did come in. But the most important issue is that if you go back in history, you can see how we can really perform in a variety of market conditions.
Wealth management, clearly the biggest profit driver, as it has been for a long time for UBS. How are your clients within wealth adjusting to the market turmoil, the political uncertainty? Are they staying on the sidelines? Are they looking for different products, different asset classes?
Well, you look at, so far we haven't really seen a major shift in asset allocation by clients. And when you look at first quarter and the first couple of weeks in April, they took more advantage of market volatility to reposition their exposures within the already set asset allocation. When you look at the last couple of weeks, it's fair to say that probably there is a little bit of fatigue coming in from news, coming from the trade tariffs situation. So, but for the time being, I have to say that despite the real or significant spike in volatility and huge volumes, we saw peaks in volume that exceeded 30% of the COVID times in the first week of in the first couple of weeks of the second quarter. So, despite all of this, clients are quite calm and focus on managing within their asset allocation.
Is that volatility, that peak in volatility behind us now, do you think?
I don't think so. I think that's, as I said, probably now there is a little bit of settling down. I think markets have found probably a new dimension in terms of where to reconsider things from, and now it's going to be depending on the developments on the tariff front. I think that uncertainty is there. It's very positive to see that there are ongoing discussions in terms of finding agreements. Having said that, if this goes on for too long, uncertainty has also a cost, and therefore probably investors and corporates will slow down their investment plans.
How are your private banking clients being impacted by tariffs?
No, for the time, clients themselves directly in their asset allocation, just as a function of markets movements. Of course, we have a lot of clients who are also entrepreneur, business owners, and there it depends very much where they are. So I think the tariff issue won't be a game in which everybody loses or everybody gains. Some people will be winners, some people will be losers.
We have the final Japan PMI numbers for the month of April coming in at 48.7, again in contractionary territory, below that threshold of 50. It's been below that threshold since June of last year. And of course, we are now watching the repercussions on manufacturers, on exporters. We have seen export growth slowing down in the previous month as well. Today, of course, as you can see right there, is Bank of Japan Policy Day, Haidi. Not much expected in terms of rate changes given the trade uncertainty.
Such a tricky time for global central banks, Shery. We're watching Chinese state media as well because they're saying that the US has been proactively reaching out to China through various channels seeking to negotiate on tariff issues. As according to a post by a social media account affiliated with CCTV, let's bring our China correspondent Min Min Lo in Hong Kong. And it's interesting because even at the moment we're hearing from President Trump speaking in the Newsmax town hall saying that there's a very good chance they'll make a deal with China, but that any deal with China has got to be on their terms or on the US's terms. So in terms of this dynamic, this is the first time that Beijing has acknowledged that the US has been even reaching out for talks.
That's right. First time that China has acknowledged this, and interesting that Trump didn't refute this just hours ago when he was speaking as well. And things are moving really fast because just yesterday at 3 p.m. at the regular foreign ministry press conference, the foreign minister's spokesperson actually said that both sides have not been having any trade talks up until now. And then at midnight, we are getting this post saying that U.S. has been reaching out through various channels. And it's interesting because this post also said that basically that China doesn't need to negotiate until the U.S. offers something substantial or something meaningful, and this really shows how the U.S. is the more anxious party here. And meanwhile, the top story on Chinese state media actually has been President Xi in Shanghai yesterday, chairing this symposium about the next 5-year plan from 2026 to 2030, and the big theme in his speech was all about managing China's own affairs well, and we have repeatedly seen Chinese state media saying that China is preparing for a protracted tariff war. So it doesn't look like there is any urgency from the Chinese side. And it looks like this is just very, very early signs of perhaps the U.S. reaching out to test waters and figure out what would it take for China to come to the negotiating table with them.
When it comes to the uncertainty over trade flows, we haven't really heard from China when it comes to the latest data on that. What's happening?
Yeah, this is actually quite unusual because the Chinese Ministry of Transport typically puts out the weekly trade data every Monday, but we haven't gotten this week's data just yet. There is no reason that has been given so far, but of course today is the first day of the 5-day public holiday, which means we'll likely not hear anything until next week. But there you can see that up to mid-April, trade has been holding up pretty well. The week before last, trade was 10% higher on year if you look at the weekly data, which suggests that maybe there has been shipments to other parts of the world, including Southeast Asia, that is making up for the shortfall of exports to the U.S. But you look at the latest sort of forward-looking data, the PMI data coming out yesterday, showing that new exports order was contracting pretty sharply. So I guess we'll have to wait until we get the monthly data for April. That's coming out next Friday. It will give us a better sense of how China's trade is faring post-Liberation Day.
Bloomberg's China correspondent Min Min Lo there. Let's take a look at how we're faring when it comes to the after-hours trading in some of the big tech stocks. Namely, of course, we've been seeing that jump in Meta and Microsoft, both on sort of favourable interpretation of those results. Meta in particular jumping as we saw advertising holding up, AI spending also defying tariff concerns despite some flagged weakness from the CEO when it comes to reduced spending out of Asia, as well as some of the concerns over European services as well. Microsoft also up by just about 7% on the back of the cloud numbers, but we are seeing that decline when it comes to Qualcomm, I should say, the disappointment there with those numbers. Let's bring in Beth Kindig, who's a lead tech analyst at IO Fund. Beth, great to have you with us. So let's start off with the good. When it comes to Meta, it was sort of twofold. The concerns was whether advertising was going to hold up and therefore continue to fund the spending in AI, and also how that investment and development in AI was going. Were you encouraged on both of those fronts, like the markets seem to be?
Yes, and particularly with Meta, what was good to see was the very large earnings beat. It was a 23% beat on the bottom line. That piece was sizable. I mean, this was a huge surprise. When it comes to the ads, we've seen Meta have bigger beats. In fact, last year, Meta's revenue growth was far higher than the revenue growth we're seeing today.
Some of the concerns over spending in Asia, for example, do you think we're at the cusp of not quite seeing the impact of the trade war, tariffs, and some of the broader sentiment and confidence concerns? Or are we seeing sort of the, I guess, idiosyncratic ability of some of these tech businesses to withhold those pressures?
Those questions did come up on the call, and management was a bit vague. They definitely pointed to a pullback from China. They pointed to lower election spending, of course. What analysts really wanted to hear was that discretionary spending. They specifically asked about auto, and management did not answer to it. However, from my perspective, like I said, last year we were seeing revenue growth in the 20% range for Meta. We are decelerating every quarter right now, and the Q2 guide suggests an even further deceleration, and that piece would point towards some softening.
Beth, when it comes to some of the other big earnings that we've been watching, Microsoft was another one, obviously a favourable reaction with those markets as well. The cloud business continues to look pretty resilient.
Oh, yes, absolutely. This was a major surprise this evening in a positive way. Azure is accelerating. 16 points is coming from AI versus 13 points. What I would point out about that is that means half of Azure is coming from AI. Analysts were lowering Azure estimates going into this earnings report. So Microsoft really came up big tonight, specifically showing us that AI is starting to move the needle, specifically around cloud spend.
Are the concerns over cheaper AI models coming from China, for example, that weighed on the sector, gone now?
My stance has been the democratization of AI. The more AI that you have in the hands of more people, whether that's at the developer level, consumer level, enterprise level, the better for all participants. When AI is this expensive, it keeps it reserved only for big tech. That has a very limited addressable market. We want AI in everyone's hands as cheaply as possible so that it can scale. And we are seeing no evidence of cheaper models from China impacting AI spend right now in the United States.
Beth, we're still trying to gauge where the Trump administration will go with those exemptions when it comes to semiconductors on tariffs. What are your expectations right now of what eventually that could look like?
I believe the United States will empower AI to continue full steam ahead. Meaning, I would expect there to be semiconductor exemptions, specifically around, AI design companies, components, the fabs, making sure, anything built in Taiwan would be exempted, things of those nature.
Are you seeing any indications of supply chain disruptions right now? We are going to get, of course, Apple's results as well. How big of a risk is this dependence and really interlinkage with China at this point?
With supply chains being globalized, as everyone is fully aware, and now needing to be localized, we will see supply chain disruptions. Will they show up in this quarter? Probably not. Specifically, there will need to be a sourcing change. There will be a lot of disruptions around sourcing. Apple shipped 600 tons of iPhones ahead of the tariffs. Over time, there will need to be sourcing changes. And then, of course, who's going to absorb the impact of the tariffs? The consumer is too weak. It's idealistic to think the consumer would absorb that. Therefore, I would look for impact in margins.
Where do we go when it comes to Tesla, right? Because that continues to be the big drag when it comes to Mag 7.
When I think of Tesla, I think of an interest rate story. I also think of a company in the crosshairs of a weak consumer, losing China as a customer. Just, this company is foreshadowing what can potentially happen when you lose China as a customer, when you have a weak consumer, when you have these interest rates elevated. I don't think it's a Tesla-specific problem. I foresee some of the issues Tesla faces becoming more widespread the longer that tariffs are in place.
Beth Kindig, lead tech analyst at IO Fund. And here's more from the corporate front. Some European automakers, including Stellantis and Mercedes-Benz, have withdrawn their financial forecasts for this year due to the uncertainty around U.S. tariffs. Volkswagen left its outlook largely unchanged, but says it has not factored in the levies. Car makers have struggled to tally the cost of the tariffs as the Trump administration changes its position. Ford will not be increasing the price of its vehicles until it sees how its competitors respond to higher costs from U.S. tariffs. The company had earlier planned to raise prices in May. CEO Jim Farley says Ford will detail how much the levies will increase its costs when it reports first quarter earnings next Monday. Airbus says it won't cover the cost of tariffs on its planes imported by U.S. airlines, setting up a clash with the carriers. The plane maker CEO Guillaume Faury says its customers are not willing to pay the levies, but that it's on them. Airlines, including Delta, say they won't pay the extra costs, but are finding workarounds such as routing new aircraft through another country first.
Still to come, as President Trump takes the US out of the global climate fight, it seems China's Xi Jinping is more than willing to fill the vacuum. We have more on that story next. This is Bloomberg. Well, President Trump's first 100 days in office has delivered dramatic shifts in global climate diplomacy. One of his first executive orders, of course, was to once again pull the US out of the Paris Agreement. He then targeted regulations and agencies meant to limit environmental impact while chanting "drill, baby, drill." Last week, leaders including Chinese President Xi Jinping and the European Commission President Ursula von der Leyen held a virtual meeting aimed at returning the focus to climate action ahead of November's COP30 summit. The US was not invited. Let's get more with the Bloomberg Green managing editor David Stringer. And so, David, if you hone in on sort of China, there's been so many ways that we've seen, obviously, Beijing try to extend soft economic climate diplomacy to other countries, trying to fill this gap in leadership that the US has vacated. Is this all part of kind of Xi's broader strategy to commit the country, and are they, committing themselves to emissions cuts?
Well, Heidi, yeah, it was a really interesting intervention by President Xi, and it was significant in a couple of ways, and firstly because it was his first major public speech covering climate policy since 2020, when he set China's goals, and that was incredibly significant back then. He committed China to peak emissions before 2030 and hit net zero by 2060. What was really interesting in this meeting last week is that he kind of doubled down. He committed China to setting more stringent emission targets in the months ahead that would cover through to 2035. And really significantly, they will cover the whole gamut of greenhouse gas emissions. It's a bit in the weeds, a bit in the details, but right now, China's goals only cover carbon dioxide. The next set of targets will cover things like methane, like nitrous oxide, and that's really important because China's pollution of all of those other gases often accounts for more greenhouse pollution than the entire climate footprint of other nations. So really significant step. Also, he sort of recommitted China to continue this incredible build-out of renewable energy. We've seen China install more than the rest of the world combined, pretty much. And even though growth has started to slow, Xi coming out and talking about that, you can probably see that as a catalyst for the sort of next leg of that growth.
Yeah, and that sort of clear support for multilateralism, right, from China. Did he draw a comparison to US policy under Trump?
Well, I mean, not explicitly by name. He didn't talk about the US, but he did talk about a major country and its sort of pursuit of unilateralism and protectionism, and talked about the damage that he considered that to be doing to the international system. We've seen a lot of commentary in some of China's state-affiliated media in the last few days, drawing that link explicitly and comparing US policy under Trump to Xi's speech. Interestingly, though, the US and China have often found ways to continue cooperation on climate action, even when other areas of the relationship have been quite fraught. What Xi's speech suggests is that won't continue. He really stressed China's role collaborating with the global south, and perhaps that is going to be the main area of collaboration for China going forward.
So China has been pretty dominant when it comes to solar companies. They've announced more losses in recent days. Are we going to see a response to the U.S. tariffs? What's the plan?
You're right. I mean, Xi himself sort of praised the clean energy companies and their sort of global dominance. But the truth is that dominance doesn't translate to profits. We've seen massive overcapacity. The supply far outstripping global demand. It's pushed down prices. It's squeezed margins. And in fact, just in the last few days, we've seen China's 5 biggest solar companies rack up first quarter losses of more than $1 billion US. It's really been quite a tough situation. They are going to respond to tariffs. Now, the US, not necessarily the biggest market for them, but it has been significant. What we've seen is those Chinese companies had often set up shop in Southeast Asia and exported panels from those countries. 4 big Southeast Asian nations are now facing tariffs of above 3,000% on solar exports. And so we've heard during earnings calls in the past few days, CSI Solar, they're looking to move around production capacity. And specifically JA Solar, another of those large companies, well, they say they'll press ahead with plans to open manufacturing in Oman. All of this intended to respond to that threat from tariffs.
Bloomberg Green Managing Editor David Stringer there. Coming up next, Chinese media reporting that the Trump administration has reached out to China seeking tariff talks. We have more details ahead. This is Bloomberg. HKEX CEO Bonnie Chan says she's expecting the city's IPO boom to continue despite volatility in the markets. She told us exclusively that the exchange is weighing dozens of applications and is bullish about a flurry of secondary listings this year from mainland Chinese firms.
We have about slightly over 150 applications being processed, which is a very high number, I would say. But I see 2 big trends emerging. The first one is the fact that a lot of companies which are already listed in the domestic Asia market, they're now looking to also pursue an additional listing in Hong Kong. There are a lot of reasons behind that, but one big advantage of having an offshore listing status is that therefore it will give them a fundraising platform. And that could support their expansion plan overseas. Many companies in China are pursuing what is called the +1 strategy. So I think that's a big attraction to them. So in the pipeline, we have probably over 20 of those companies which have already filed, and another 20 plus which have already announced their plans to pursue an additional H-share listing.
Now, I need to ask you about short term.
Yeah.
The last few weeks has been extremely volatile for markets. And I'm wondering, just a general consensus based on the people that you speak with, are people more conscious or cognizant over pushing back pipelines for listing over the short term because of what's going on? Is there a sense that people are just waiting for the dust to settle?
Yeah. Well, first of all, I think the volatility is felt around the world. It's not specific to Hong Kong. But I would say even with all that volatility, and they are pretty dramatic, our market has demonstrated a lot of resilience. In fact, there was this day when we experienced quite a big correction. It was also the day that we've recorded record trading volume, and it was only a couple of weeks ago. However, I think probably a less noticed fact is that even amidst all this volatility, deals get done. We have in the past few weeks priced and successfully listed another handful of companies on our exchange, and the pipeline continues to build. So no signs of the appetite abating. In fact, quite the opposite. I think given that we've demonstrated that resilience and we were able to trade through this period of heightened volatility in a very orderly manner, I think people are now beginning to really appreciate what Hong Kong and HKEX have to offer as a fundraising and a trading platform.
HKEX CEO Bonnie Chan speaking exclusively to Bloomberg's David Ingles. And these are some of the other corporate stories that we're following. Yum China reported a weaker than expected operating profit last quarter as promotions aimed at frugal diners pressured margins. Operating profit came in at $399 million, lagging estimates. Revenue was up less than 1% to $2.98 billion, also missing estimates. Yum China's U.S.-listed stocks fell the most in the month. Post-earnings, the miss comes amid discounts induced by a fierce fast food value war in China. EV maker Rivian is said to have stockpiled a reserve of batteries from Asia ahead of President Trump's tariffs. Sources say it acquired a supply of cells from China late last year ahead of the U.S. election. We're told Rivian has also recently worked with Korean supplier Samsung SDI to move a large amount of battery inventory to the U.S. Take a look at the JGB markets right now in Japan as we head towards that Bank of Japan policy decision. No change expected for a second straight meeting. The rate to stay at 0.5% according to all economists surveyed by Bloomberg. But we're seeing a little bit of that flattening of the bond curve, although our Bloomberg colleagues like Mark Cranfield do warn that we could see a pop in the front end of yields given that they haven't sufficiently priced in the fact that we could see 2 more rate hikes this year. The China show is next. This is Bloomberg.